Dylan E. Taylor, Chairman and CEO of Voyager Space Holdings. Please welcome Dylan.
Thanks so much. It's an honor to be here. I want to particularly thank Scott and the team for inviting me to speak today, and I look forward to taking you through some thoughts on how we can enable humanity's most ambitious space projects. So for me, I thought it would be important for us to start with the big question. Why does space matter? To me, we should all be thinking about this. What drives us? What gets us out of bed in the morning? What motivates us? And certainly for, I think, a lot of people, it's the exploration. You know, humanity, I think, is wired to try to understand what's over the hill, what's next, what's the next destination, and certainly space has captivated our fascination in that regard. For some people, and I know there are many people listening in, it might be the promise of fortune. Obviously, this is a massive, massive investment opportunity, so that might drive a few of you as well. My personal answer, I just want to share with you because I think it sort of informs the remarks I'm going to make, is I think it's a new paradigm, and I think it allows humanity to reimagine what we can be, humanity 2.0, if you will. And so I'm more motivated by the social implications for space, and I also think it represents the best of us. And so it embodies a more hopeful future for mankind. And reflecting on 2020, I think being hopeful for the future is incredibly important for our species and for commerce. So just want to share that with you. And I would just ask you to reflect on your own individual question of that. What is your why? And I think it's really important to understand that, the answer to that question. So let's talk about the how. If we believe that space is the next big thing, what are the obstacles? What's holding us back? And really the goal of my remarks is to contextualize really the financial aspects of space as it relates to the most ambitious projects. So this isn't blocking and tackling and incrementalism. This is the transformational projects that we need to take on. Another thing I'll just ask you to reflect on, and I kind of use this to govern my thinking sometimes, is if the markets don't make sense intuitively to you, ask yourself what they might be trying to tell you. And I think if you have that viewpoint, oftentimes you can have breakthrough insights on what markets are actually, what's holding a particular market back. And I'll talk more about that. So disruption, classic word, Silicon Valley was built around it. We built the elevator. The era of disposable airplanes, of flying rockets and throwing them away is over. Credit to Elon and SpaceX and a lot of other very smart, hardworking people. For me, the seminal event, I had the pleasure of being at this launch, was the Falcon Heavy launch with the dual rocket landing. To me, that was science fiction becoming science fact. But what it's allowed us to do is completely crack open space. And I think we're going to have a new generation of spacefaring humans that I think are going to positively impact the world. But just to level set, and for those of you who are not space experts, reflect on the fact we've only had 591 people to space so far. And of those, only 24 have been deep enough in space to actually see the Earth set against the black backdrop, and only 12 have walked on a planetary body other than the Earth. And reflect on that's about 110 billion people who have ever lived. That's a very rare group. And reflect on the fact that, at least as of this morning, it moves around a lot. There were 2,200 plus billionaires on Earth and about 1,000 Nobel Prize winners ever awarded. So again, you're more likely to be a billionaire or a Nobel Prize winner than an astronaut at this point. And as we know, Sir Richard Branson and George Whitesides and other great people in this industry are opening up tourist travel with Virgin. We should be flying in 2021. I don't have any inside information on that, but I think that's likely. And then, of course, we have the two richest people on planet Earth, Jeff and Elon. I think Elon nudged ahead of Jeff here yesterday with the run-up in Tesla, both committed to opening up the high frontier. And Blue Origin should fly, I think, in 2021 as well. So the point here is we're going to completely transform what space means. And the narrative, especially in the retail domain around space, is going to be dramatically impacted. So I think this is important, especially as an investor or a potential investor, to think about the wider context. And in my mind, we're going exponential. So famously Ray Kurzweil and others talk about exponential growth. And the key precept is that you don't know you're in exponential growth until you hit the hockey stick. And we are hitting the hockey stick in space. I think we can all see it. Certainly the excitement around it is amazing. And very smart people from Wall Street, Morgan Stanley, Goldman, many others have this as a multi-trillion-dollar market. This data is actually from 2017. I think Morgan Stanley would upgrade their numbers at this point. And in my mind, not only will we exceed $1 trillion market, I think we'll do it much sooner than 2040. Classic S-curve disruption. The whole notion here is that the old guard, if you will, stagnates. Innovation becomes harder and harder for them to implement. And the new guard comes along and ultimately has a better way or a different way of looking at things. And certainly this is the classic dislocation disruption that you see. And certainly that's what we've seen with reusability of launch. And one other point just on disruption, I think a lot of people miss this point, is disruptive technologies always come from the bottom use case. I mean, if you think about SpaceX, again, and the first Falcon rocket that they launched, I mean, I think there were a lot of snickers in the industry at that time. But what they were trying to demonstrate, of course, was the ability to reuse the rocket. And ultimately, they've chipped away on that. And now, of course, you could argue that they're not a low quality use. They're either a medium quality use or even a high quality use. They might not be the Six Sigma that ULA provides, but they're certainly a Four Sigma, very highly reliable launcher, and they're launching at a much, much lower cost. So I would just ask you to reflect on, what technologies are coming up fast from low quality use to medium quality use. A famous example here, this is a graph of smartphones versus PCs. For those of you who would remember this, if I were to tell you, in 2008, pre-iPhone, that your Palm Pilot was going to disrupt the PC, your Compact 386, I think it was called, or Dell computer that sat on your desktop, you would have said I was crazy. But famously, not only has it disrupted the PC, the smartphone sales have far exceeded PC sales by an order of magnitude. So what's holding us back in space? If classic S-curve disruption is happening, why aren't we getting more ambitious projects funded? I have some thoughts on that. So I call them the four horsemen of space finance. There's really four obstacles that we have. I think they're all addressable, but just to highlight them, it's illiquidity, perceived higher risk, perceived higher CapEx, and longer time horizons. So I'm going to take those in turn and talk a little bit about those. And forgive me, typically I would want to calibrate this for more of a finance 101 presentation, but this is a little bit more advanced. So I'm happy to follow up with anybody that I might lose along the way here, but it is important that some of these concepts are described. First, this is a classic risk versus return graph. And as you can see, a very safest bottom left would be money market, having in a bank account, if you will. And at the very top right is when you get into international equities, private equities, and things of that nature. And the whole notion is that in order to get a higher return, you have to take on more risk. And so you can see in a classic sort of risk curve, that being represented by the red line, the challenge is the risk is always highest at the beginning. And before the concept is proven out, before revenue is generated, you also need to invest. And so CapEx is typically highest when risk is highest. And so investors are very weary because obviously you can invest a ton of money at a very high risk situation and never see a return on that. Our industry, my reflection is about 10, 11 years ago, we were really blocked at that early stage capital. There weren't a lot of angels investing. There weren't a lot of micro VC funds investing, seed capital funds. I think we've largely addressed that. I think we're getting many more company formations. That's healthy. And I think the industry has been unlocked to what I would call the next phase. Where I think we're blocked now is really this intersection between, call it late stage capital, venture capital, private equity, and the public markets. And typically when you're blocked there, what you really need to do is you need to build additional scale, because the scale ultimately will de-risk the opportunity. So fundamentally, I think we're kind of here, and the goal is we need to move it a bit further right here, get some more public company exits, have more success stories where we're returning capital to investors. So here's another graph that's sort of a classic graph that at the bottom there, the big trough, which is just another way of recasting the previous slide, is called the Valley of Death. So within space, because CapEx is high, because returns are elongated typically, that Valley of Death is very deep. Now the good news is, like all very difficult journeys, the destination is normally worth it. So the back-end returns are as high or higher than any other high-tech industry. But that's really the challenge, is getting through that deep trough. So back to the four horsemen: illiquidity, risk, high CapEx, and long time horizons. Let's take those in turn and talk a little bit about it. So illiquidity, the whole notion there is that if you lock your capital into a particular company, when are they going to actually generate a return, not only in terms of profit, but cash flow? And so oftentimes, especially venture capital investors, they're thinking about their fund life, right? They're raising capital predicated on the fact that they need to return that capital with a return in a particular period of time. And typically that return is measured on internal rate of return. Internal rate of return famously is really rewards you for how quickly you return cash flows. So even if you have a large cash flow, but it's further in the future, you're actually better off having smaller cash flow returns, but earlier on in the process. So it's almost like a velocity of capital measurement, as opposed to a return on capital measurement. So oftentimes VCs might be at the very end of their life. They look at space, they're super interested in it, but they want to wait a little bit longer. They want those returns to be a bit tighter in terms of when they come back. So how do we solve that? I think one way we solve it is to have some public market exits, like we've seen with a couple of the SPAC formations, because ultimately, if we can demonstrate the capital is returning to investors within a reasonable time frame, let's say 7 years or less, and that those returns are actually quite high, I think that'll mitigate it tremendously. CapEx, I think we've done a great job addressing this. For those of you who don't know, CapEx is capital expenditures. One of the things we can do as an industry, though, is we can collaborate more. We famously don't have industry standards, or very few industry standards, and that really holds things back. I mean, imagine pre-COVID, you're traveling to hotels around the world, and every hotel you check into has a different Wi-Fi protocol. And you have to have different hardware for every hotel you check into. It's essentially where we are as an industry. So we really need to address standards. We need to collaborate more. And by doing that, CapEx collectively will come down and everyone will benefit. The other one I would just highlight is this time horizon notion. Again, as we get second generation entrepreneurs, third generation entrepreneurs, as we become better at the business of space, because we have low cost reusable launch, ultimately we're going to have more success stories. We're going to have not only higher returns, but those returns are going to come back in sooner durations, and that's going to help mitigate that risk as well. So just in conclusion, my observation is space is both, these are perceptions, risky and illiquid. Time horizons are long and CapEx is high. But the good news, again, just to reiterate, the returns are enormous. I mean, if you look at SpaceX's valuation over the last 10 years as an example, it's a massive success story. So even though the returns are back-end loaded, they're extremely high. And again, just to reiterate, we can collaborate more and mitigate a lot of these so-called four horsemen. So again, what I think the industry needs, let's minimize the four horsemen. Let's have more collaboration, more industry standards. One of the things we also need to do is minimize the flameouts. Famously, space has had some flashes in the pan, if you will, companies that raised a bunch of money and then didn't make it. I think we need to minimize that. We have to build more scale. This is one of the things we're really focused on with Voyager. We have to get these companies scaled up That'll help de-risk the model as well. It'll make them companies easier to invest in. And ultimately, we need more success stories. We need more IPOs. We need more exits, although 2020 was very notable for the number of exits. So I think we're on the right track there. And then just final thought, my observation of the industry where we are right now, the companies with the capability, unfortunately, seem to lack the ambition. And by ambition, I'm talking about the real far out, really transformational projects for the industry. And the companies with the ambition, the ones that really have the go get it attitude, don't have yet the capability. And so in my view, the industry really needs to create companies that have both capability and ambition. I've got a kind of corny term here that I coined, capabitious. I don't know if that sticks, but the whole notion here is we've got to marry that new space entrepreneurial spirit and the deep ambition we have to address that why, right? Whatever your why is, but we need to do it from a capability first standpoint. So with that, I'll close, and thank you again, Scott and team, for having me.